Okay guys, Simon Davis here, Zone Trader. Lately I've been looking at trading in the range. I'm going to show you like kind of two types of ranges today. The reason why I make these videos is so I can go back and relearn from them and keep up to date with what I've been learning, and also to help you guys break through faster in the Forex market. All my concepts and analogies, market tools are all from Inner Circle Trader, as you know, ICT, the legend himself. Um, so yeah, I've just been basically playing around with with the ranges. So like market is 80% in a range. For like the market is in 80% of the time is in a range, and then it drops out of a range and goes into another range. So you can see here that we've got a range here, so say here it's range bound, then it drops out, then it's range bound, then it drops out. Like ICT students aren't breakout traders. We don't trade the breakout. We trade within the range because we know how to do it. So I just want to basically explain as good as I can to you guys how you can spot ranges. So it's basically the high and low. So I'm on the daily here, so I'm on the daily range. So I'll go high, and I use these parameters for my lines, and then low and then high. So we've got a trading range between here and here, and then to find equilibrium you can either use your fibs or I use my extensions. So if I go to 4 R4, which is quite temperamental, it's not perfect, but it doesn't really matter for this scenario. So then you mark out your middle 50% equilibrium of the range, and today I'll show you how it created a perfect opportunity to trade these last 3 days upwards, bullish on Great Britain USD because of this concept, just because of this concept and the 79% retracement. If you're new to these concepts, guys, these are going to go way over your head, and I advise you to speak with me via Facebook or some type of social media and ask for ICT training, and I can send it you, no problem. I don't ever sell any training. I give you ICTs for free, which is worth $1 million, and once you go through it you'll realise why, and the people who know ICT will definitely back me up on this statement. So we've got the and also guys, I hope I'm speaking a lot louder tonight because last week my daughter was very light sleeper, she wasn't well, and I had to be quiet, and a lot of people have been asking me to record that video, and when I get time I might, but then again it's already done, so we'll see. If I do, I don't, you know, I've got the freedom to do whatever I want here. So anyway, we've got the daily. I've just marked out the daily range. So what I've done is the high, the low, equilibrium, and then we've got 25% high and 25% low. So if you drop down, as you can clearly see, the market trades from high to low, high to low, high to low, roughly. And you can see order blocks on the daily within this as well. So you've got an order block there. So, and then you've got a 79% retracement here for this one, which is beautiful. So what happens is the market will come down kind of through the equilibrium, and when it's in the lower portion, in like this lower portion here, the market will spring back to equilibrium. So if you're down here trading in a trading range from here to here, and you find out equilibrium's here, you can trade back to equilibrium. So, and when you're up in the top 25%, you can trade back down to equilibrium. You see, you've got one trade there, one trade there, 2, 3, loads of trades in here back to equilibrium, because it's like if you were to say this was a magnet in the middle, and you've got something magnetic, which is like a piece of metal, and you pulled it away from the magnet and let go, it would always come back to the magnet. That's or as ITT explains it, it's like a broom pole. And if you get an elastic band and pull the elastic band away from the equilibrium, it'll bounce back to the center of equilibrium. As you can see, it came down away from it here and sprung back to it and hit equilibrium today. So it was a no-brainer trade for ICT Masters that we were trading up on Great Britain USD and we'd get in on, oh, I don't like when it does that, bear with me, we'll get in on the I'm on the 5 minutes, no wonder. We would have got in on this order block, so we would have came out of Asia, come down, took out stops, created an order block, waited for all this price action to come back into the order block, buy here above these highs, taking out stops. Like, I know I'm talking very quick, guys, and I'm not trying to explain this to the new people. I'm trying to explain this to the people who have already been through ICTs to help them break through faster if they haven't, or just to recap something. There's a wide audience, but if you're new, guys, this will make no sense to you whatsoever, but go through ICT stuff. 60 pips available, perfect, in a day on this scenario, springing back to equilibrium. It sprung back to equilibrium here, but there was no real entry for us as ICT traders, so we would have waited for this order block, the down candle for the up move where smart money buys, and then boom, it comes back down, so it springs up for a 60 pip move. So back to the daily, and then just do that real quick. So yeah, we've got your daily range here. So the market comes down, springs back to it. So how let me get rid of these. So I hope this is making sense, guys. And I'm not just like picking out the best scenarios here. This is how the market trades inside of a daily range. If you pull your Fibonacci from here to here, you've got a beautiful 79% retracement. The market never ever crosses. It crosses it, but it doesn't close below 79% retracement. This is a huge wind up to get to. Like, the market winds up and tightens up. Small ranges, large range to get to equilibrium. Absolutely phenomenal stuff, guys, when you pick up on all this. Amazing. So yeah, we're inside of a daily trading range here. Beautiful, back to here. So we don't know what it's going to do from here. We might got an order block here, so we might see it touch the order block, come back down into this order block, and we're on the daily here, guys, so we're talking 30 pips to that order block you wouldn't trade, but from there to there you would trade a 231 pip move just in there here on the daily, which is amazing. You wouldn't enter on the daily, as you know. I can also see an order block here back to equilibrium here, and touches here, goes down, doesn't quite touch, but touches the wick, which is good enough on the daily, definitely, because it's large price action on daily, it's not just thin. So we can use the wicks on the daily. So spike through, down. And if you got this order block, it would have been 400 pips there for the taking into the 79% retracement. So let me just show you on another pair. I don't want to be like, oh, like it's just that pair is gonna happen. Let me just really quickly show you on another pair. It happens as well. So we've got a trading range from here to here at least, and then you can pull your fibs and do this, find out the 4 points, but 4 blocks. but I use my extensions, which I've made a video on this how to. You can also use these for take profit and risk rewards, because you've got like, there's your stop loss, you've got your entry. So if you were taking a trade from there to there, you can see quite clearly it's 3R, which is phenomenal. Simple. It's not perfect here, but I'm not trading this, so it doesn't matter. So I've got my range, I've got my equilibrium. The reason why I use this dotted line is because it's like half full, and then if you think about it, there's like 4 in 1 here, which is 25. So you've got 50%, which is 2. Then you've got 25%, which is 4. I don't want, this is not part of teaching, but you know, I see it as that. It's smaller, so it's 25%. That's, you know, it's not 4 exactly, but it doesn't matter. So yeah, we're in the we're trading in the lower 25, like lower 50%. So we've got 25, 50, 50, 25. So we're trading in the lower 50%, and it's not going past that. So we don't really know what's going on, but you can actually be cool about this, because this is a trading range here as well. So we're gonna drop down into this bit here, because that's a trading range clear. So we've got daily trading range, then we've got, like, I'll drop down into an hourly trading range here because it's tighter. It's getting ready to do something big. Great Britain JPY. You know, I thought I didn't press record then. Should be recording. So yeah, let's do this trading range. So I use this line. I don't really mind using this line here. So we have from here to here, from high to low. So we've already got this range marked out, and then I'll do it with the fibs. You can do it. So, no, it's not with the fibs. So you pull a fib from low to high. You should have the equilibrium on your Fibonacci. I mean, I can do this by eye, because with me being a graphic designer, I can see it clearly, like quite close to the fib by eye, because I've trained my eye to divide things equally with me being a graphic designer. But if you can't, if you're not, and you're not very good at doing that, you can just pull a fib and then you just find out the lower 25% that way instead. And I don't really want to fiddle around with these, but it does help, because you might think it's equilibrium, but it's not. You know, if you're on that other time frame, and you don't see the whole picture when you're trading. So we've got a range here on the hour, so it works on the hour. So if I just zoom in and actually show you this bit here, we've got a clear order block here. So if you see price coming down to this bit here, and I'll explain as well, moving, I call them moving ranges, which is, I've just literally got onto this tonight. Can't wait to trade it this week. So you got your order block here, because you fast move away from the down candle where smart money buys, and then it takes the price up and does what it has to do and whatever, and then comes back to it and then trades back to equilibrium. You see that? So market goes away. I mean, this is like one scenario. So market goes away, comes back to the order block, and then it's got to go back to equilibrium. So on this day here, move market off so we can see where we're at. Yeah, on the 15-minute chart, this day here, we would have waited for Asian session, took out Asian stops into the order block and traded in, I think it's like start in New York, and then would have traded to equilibrium or past. We actually would have traded to these highs here, which is taking out stops. So we would have got in on this line here, which is our hourly order block we've just seen, and then trade through equilibrium. We know it's going this way because equilibrium's that way. This is why it's amazing to mark off your range, and then to this high here, just the top of this high is 150 pips, guys. Like, that's a week's trading in one day. Powerful. Like, you might have waited a few days for it, but still, you can trade in between it, and I'll show you. So that's one scenario. So from here we've gone off, and then if we're trading here, we're not really sure. It could come down to here, it could come up. You don't really know all the time. But we can quite clearly see here. Let me just expand this and make it better. We've got an order block here. I was going to say this one was, but it's not. There's an order block. It's a very small one, but there's an order block there. And you should really be trading turtle soups, which is run on highs. That's in another video. In consolidation, you trade turtle soups, guys. Write this down. In consolidation, you trade turtle soups. And you can trade order blocks, but mainly turtle soups. Order blocks in range, in order blocks in trending markets and in reversals, trade breakers. That's really good to know and to use ICT tools. But on this day here, to Friday, the market comes up, rallies down away from this candle fast, and then it comes back to it. It takes out stops here, so you know it's an order block. This one takes out stops and then rallies back and to equilibrium. Just this trade alone is 79 pips. I mean, Great Britain JPY is a volatile pair, but man, that's amazing. Like in one day, 79 pips, easy, one shot, one kill trading, powerful. And then we've got an order block here which gets triggered, and where does it go back to, guys? You know, it goes back to equilibrium eventually, but you can also get in on the order block there as well. So this is on the 15-minute chart, so I broke the hour down, the hourly range into 15-minute time frame to find a numerous executions back to equilibrium. That's how powerful it is trading in the range. As you can see today, guys, it's gone into an order block. Like, let me just take rid of that line. It's like I'm drawing trend lines. I don't draw trend lines. I draw straight trend lines only. I don't never ever draw diagonal trend lines anymore. I'm in trailing line anonymous. So you've got your order block there, fires up, so you know that smart money is buying in the down candle because it rallies right up. And you've also got a turtle soup entry there, back to equilibrium. Guys, I'm going fast, but if you can keep up with this and you've been through ICT, you'll be like, what? Catching it to the pips. Precision trade and ICT style. So we've got an order block there, comes back down to it and rallies away. So today alone would have been beautiful, trading back to your equilibrium from that fat order block, 60 pips. Beautiful. Right, so that's the stationary range, and I want to speed up. I'm not going to speed up my voice, but I'm going to speed up the pace of what I'm doing. So let me just open up Great Britain USD on a daily, and let me just show you like a moving range. If you can keep up with this, guys, it's powerful. Okay, so we've got a range from here. A range is just from there to there, or from there to there, or from there to there. A moving range is like that. It's like swings, basically swings and ranges. So we've got, it is a range, people call them swings, but it is a range. So you've got a range from here to here. And so you draw that. So you know the price is going to try and get up to there eventually. So there's your target, one of your targets. So price comes down, let me draw it like that. So yeah, it goes up and down, but it basically just goes down. Okay, so then it goes back up. Where's it going back up to? An order block. On the daily, guys, almost to the probably pip there, you can see it's unbelievable. So that was a range filled in. Because once the market's there, this isn't here, it's got to fill in here. When it hits a low swing low, it's got to fill in. You can get in on this upward move with this order block here, but then it creates an order block there for you to sell here. Okay, so then the market goes down again and then creates another range like that. There, from there, I'll make a different colour. Like, I can see it. If you've not broken through with this knowledge, then it's hard to see. It's got range from there to there. Price comes up, breaks through it with a total sweep. And then where's it heading from? Target above this range, and price shoots up above the range. It's fantastic. Total sweep entry. And then you've got a range from here to here. Create that orange, no, purple. Range from here, it's not a very different colour, is it? Blue, that'll do. From there to there, so you've got a range from there to now here, got a range from there to there. So price is going to fill in this range, and it does, and it fills in to the order block, almost to the pip, once again to there. So now you've got a range from there to there, and then it fills in. It fills in this range, which is your stops. There, can you see how this is working all the time? Day in, day out, day in, day out. So you've got a range there. Let me just change this colour again. I'm speaking quieter now because my daughter's just woke up. Sorry guys, but it is what it is. So you've got a range from there now to there now. So the range will want to swing and fill in this range, this like small trading area where there's not much trading. Trade into it with an order block again to sell off, and then where are we heading for? Below this range to take out stops there. Okay, so then price has come down, which has then created another range, and I literally just clicked onto this week. It's amazing. Another range here, so there to there. Price comes up, and where are we going into? An order block here, and then you can sell off. If you want to get in this move here, where it fills in, you can use this order block here again. Okay, so then you've got a range from here. It's gonna get messy, this guys. From here to here, and price comes down, takes out the stops, and you've already seen it come from an order block. Then it creates another range from here to here. See, each swing is a range. So then you've got, just call it swing, call it range, whatever you want. From there to there, it wants to fill in, and then where does it fill into? Fills into an order block. A few days hitting that order block, like I don't know what. You've also got a small one from, so you've got a range from there to there, then you've got, then you're up to there, so then you've got a range from here to here, and then in a little, if the prices are getting smaller and smaller, it it coming up to this one here, and then you've got a range from here. You can see, sorry, I'm just going to carry on, guys. It's amazing. From here to here, and then it wants to fill in with an order block, kind of an order block. Let me see. Actually, it's probably we've actually got an order block because it's a market reversal. We've actually got a breaker here because high, higher, high, taking out stops, breaker. Guys, to the new people who's lost, but to the ICT cram, congratulations if you just broke through. So you got a range from here to here, and then the price comes down to create that range, and it wants to fill back into an order block here, and boom, away we go, guys. Away we flip and go. We've got 1,000 pips there. If you put a standard on that, you're making 10 grand. Powerful shit, man. Powerful shit. So then we've got a range from here to here. Where will price want to fill in? It will want to fill into here, but it doesn't. It refuses, and then goes into consolidation. And then, but you can still do it. You can still do this, guys. Don't worry. So you've got a range from here to here. Price will want to fill it in. Takes out stops on the range. Goes back up. Then you've got a range from here to here. Price will want to fill it in. Trade the order block now, and you can do it in between here as well. Eventually we trade back into this order block here for Brexit. Then we go into consolidation. As you can see, guys, how the market ranges ebb and flow. Turtle soup order block. Turtle soup order block. Not exactly like that, but you can quite clearly see. I hope I've quite clearly, demonstrated that that's what the market does. Let me just go to fresh data. So we've got a range here, so this is going to be a future target, definitely. And with our equilibrium we've just seen on the daily, we're at halfway, aren't we? Yeah, we're at halfway. So if we go back to this one, we have a range from here to here, and then it turtle soup this range here. Took out these stops here. So a range from here to here. Market comes up, takes out stops, but to take out stops it hits the order block. So we know to sell here, we know to buy here, because it's done its mission, it's fulfilled it. The market makers have moved price to collect stops, to take liquidity, to move it up the market. And then we've got a range from here to here, and market will want to come up and hit this order block, half of this order block to the pin here, to go down. Then we've got a range from here to here now, and then the market want to fill in off this order block here. And then as we've seen before, you put your fibs, you've got a 79% retracement, and we're going up to equilibrium. So guys, we've got a target of this one here, got a target of up to 1.27050, we've got a target to there, then we have got a target to there. It's gonna take a while to get up to here, but it is a future target, bullish target. We've got 1.34424 up here, because we're in equilibrium, we're at equilibrium here on the daily. It's probably, like I said, going to go into this daily order block, because smart money clearly sold here in this order block to rally it down to take out the stops, this block of stops here, and then we're going to definitely see this low being taken out. So coming up this week, guys, from Friday the 17th of March, we're going to see price probably react to this and break down below this and may even see this low getting taken out, because if we've gone this far, the market makers go, if we've gone this far, guys, we may as well fucking take out these stops as well. So with that in mind, we've got a fucking 500 pip target to take ICT style. This has been Simon Davis, Zone Trader with ICT Concepts. I hope it's been an interesting, exciting journey for you guys listening to this, and I hope you've had many breakthroughs and it increases and enhances your precision in your trading. And I look forward to seeing you on the next video. If you want to get in contact with me, I'll leave my Facebook profile below. Shoot me a message, guys, and if you want to jump on a call, by all means, let's do it, because it's all about giving back to the world and creating freedom in people's lives, because the number one goal of humanity should be freedom, and Forex will definitely bring you freedom. Anyway, guys, I've been Simon Davis. Thanks very much for listening, and I'll see you in the next video.